The Sunshine Coast has been one of the standout property stories of the past several years, and unlike many boom markets, it has not slowed down the way people expected. Today, we break down what is really happening to Sunshine Coast prices right now. The market has continued to post solid growth, with forecasts among the strongest of any major Queensland region for the year ahead. Unit prices specifically have been climbing at a notably fast quarterly pace, a signal that even the more affordable end of the market is under serious pressure from demand. The single biggest reason this boom has legs beyond a typical lifestyle surge is infrastructure. The Sunshine Coast is in the middle of a genuine transport transformation. A new rail connection intended to link the region directly to Brisbane is due to begin construction, and once complete it will dramatically cut travel times to the capital. Alongside that, the Maroochydore CBD development is turning what was once a car park into a genuine city centre with offices, retail, and civic infrastructure. When a region delivers this level of committed, funded infrastructure, it tends to support property values for a decade or more, not just for the length of a single news cycle. The second driver is the same one behind almost every coastal boom in the country. Continued interstate migration from Sydney and Melbourne, as people chase lifestyle and relative affordability within reach of a capital city, keeps demand elevated even as prices climb. The third driver is chronic undersupply. Housing approvals in the region have not kept pace with the volume of people arriving, and that gap shows no sign of closing quickly, which keeps upward pressure on prices even during quieter national conditions. Different pockets suit different strategies. Master-planned communities like Baringa in the Aura estate offer relative affordability with strong buyer demand, appealing to growth-focused buyers. More established rental-heavy suburbs like Namba and Palmview continue to deliver strong yields for investors. And premium lifestyle areas like Butterim and Noosa Heads remain in a class of their own, valued more for stability and prestige than rapid growth. The obvious risk is that so much of the region's growth story is now priced in. Buyers arriving today are paying considerably more than those who got in during the initial post-pandemic wave, and yields have compressed as a result. There is also the standard coastal risk of insurance costs rising with climate exposure, which quietly erodes net returns over time. So how should you think about the Sunshine Coast now? First, distinguish between suburbs riding genuine infrastructure uplift and those simply riding general coastal sentiment. Second, understand that this market has matured from a pandemic-era boom into a steadier, more sustainable growth phase, which means expectations should be more measured than in earlier years. Third, do your suburb-level homework, because the differences between growth suburbs, yield suburbs, and lifestyle suburbs here are significant. The Sunshine Coast still booming after all this time is less a mystery, and more a case study in what happens when genuine infrastructure investment meets sustained lifestyle demand. If you found this useful, hit subscribe, because we break down a different Australian property market every few days. See you in the next one. There is also a useful lesson here about how to judge whether a coastal boom still has genuine legs left, rather than simply being late-stage momentum. The key question is whether the region's growth is being reinforced by permanent, funded infrastructure, the kind that changes how people physically move through and connect with a place for decades, or whether it is being driven purely by sentiment and the fear of missing out. The Sunshine Coast passes this test more convincingly than many coastal markets, because the rail connection and the Maroochydore CBD are not proposals or wish lists. They are committed, funded projects already underway, which is a meaningfully different signal than a region simply being fashionable this year. It is also worth noting how this maturity shows up in buyer behavior on the ground. Early in a coastal boom, buyers tend to purchase almost anything within a region simply to get exposure to the growth story. As a market matures, as the Sunshine Coast clearly has, buyers become more selective, distinguishing sharply between suburbs with genuine long-term drivers and those that were simply swept along by the initial wave. This is exactly the environment where careful, suburb-specific research pays off far more than it did during the earlier, less discerning phase of the boom.